Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So as you all know, today is Wednesday. We'll be expecting a little bit more volatility in the markets. It seems like we have a progressive week where Monday was largely silent. Tuesday was quite volatile in the markets, and today we'll be expecting a continuation of the same. So we know the rule of three. One is an occurrence, two coincidence, and three is a trend. So today being the third day of the week, we should be having some common trends happening in the markets. So before I make any progress, I would like to get some response on whether you can hear me clearly. So if you can hear me clearly, you can just type hi on the live comment section, and these will confirm that everything is working just fine. So hey, J-Spod, hey, Rodney, Kevin, thank you guys. Thank you for joining the session. So let's kickstart it right away. So I'll be starting with the, of course, the most obvious thing, which is the economic calendar. So we see the list of events that we're expecting for the day. So yesterday, it was quite crazy, having a couple of news announcements. So since the session, we had jobs data coming from the Eurozone, where the flash employment change quarter over quarter in the Eurozone was a gain of 0.6%. GDP over the first quarter in the Eurozone was up 0.1%, while trade balance improved to 17.0 billion. So economic sentiment was quite negative for both the Eurozone and Germany itself. Then we had Canadian CPI jumping higher. And then later on, we focused on the most important data for yesterday, which was core retail sales. There was mixed reactions in the markets. So core retail sales rose 0.4% in the month of April, and also retail sales rose 0.4%. So both data missed expectations, which was 0.5 and 0.8%. But then compared to the previous month, it was an improvement because in the previous month, it was actually a contraction. So in this case, it's expansion, meaning that Americans are buying more stuff, which basically implies they have more money, which makes the inflation problem even more difficult for the Fed. So raising chances that the Fed may go for a rate hike on its next meeting. So later on, we had more data, capacity utilization rate in the US up 79.7% as expected. Then industrial production being up 0.5%. We were expecting 0.0%, so this was an improvement in industrial production. So fast forward, this morning, we had a couple of data coming from Asia, one preliminary GDP price index, which was up 2%, then GDP itself over the first quarter in Japan being up 0.4%. So the wage price index quarter over quarter in Australia was up 0.8%, slightly missed expectation by 0.1%. Then we had the revised industrial production month over month in Japan, which rose 1.1%, better than expected. So we also saw Italian trade balance happening at exactly 11 a.m., being up 7.54 billion, basically meaning that Italy is making more exports than imports, and this number is rising from the previous level of 2.11 billion. So now, as we head into midday, we'll be looking forward to European inflation data. So the final CPI year over year is expected to be 7.0%. So in the previous reading, it was 7.0%. So we don't expect any changes in inflation. And also for core CPI, we expect it to remain at 5.6%. So at 12:50 p.m., we'll be looking at a speech by Bank of England Governor Andrew Bailey. So he will be issuing a speech at the British Chambers of Commerce Global Annual Conference, and this will be happening at 12:50 a.m. So as you can see from the site, it's basically 10:50 in the UK. So in Kenya, since we are 2 hours away, then this makes it 12:50. So if you'd like to listen in live, I'll be sharing the link. So later on, once we get to 12:50, you can just click on the link I've sent, and you'll be able to follow on the keynote speech as it happens live. So besides that, we don't have any significant news happening for the rest of the day. So we'll be observing the housing market situation in the US. So we know I've been talking a lot about commercial real estate in the US. So in this case, we'll be focusing on residential real estate in the US. And one of the key data points we'll be focusing on is building permits. So building permits is basically the annualized number of new residential building permits issued during the previous month. That is people who applied for construction license, and the ones that got the license in the last 1 month, this number will be published later today at 3:30 p.m. So besides building permits, we also need to see the level of construction and how it's progressing. So we'll be looking at the annualized number of new residential buildings that began construction during the previous month. So these will also be happening at 3:30 p.m. and both data will share an insight of the progress of the real estate sector in the US. So later on, we'll be looking at the CB index in the Australia, and of course, the crude oil inventories at 5:30 p.m. So we don't expect much volatility after that. So the key focus for today in news that might actually move the markets is mainly the CPI and the speech from the Bank of England Governor Bailey. So as we head into Thursday, we'll be expecting more news. I think the most important one will be the Australian jobs data at 4:30 a.m. That is before our tomorrow session. Producer price index for New Zealand might also be important, and also the Japanese trade balance. Then the annual budget release for New Zealand at 5 a.m. Before we look at the bank holiday in Switzerland all day, France as well as Germany. So during the London session, we might be having low volatility as a result of a majority of these banks being closed. So we'll also be looking at monetary policy report hearings in the UK at 12:15 p.m. Then later on in the day, we look at the unemployment claims in the US, national housing price index in Canada, before we look at the Philadelphia Fed manufacturing index. So the FOMC speeches continue. So we'll be having a couple more FOMC members speaking. One of them will be Jefferson at 4:05, and then Barr at 4:30 p.m. So later on in the day, we'll be looking at the existing home sales. So this is not new home sales, it's homes that have already been constructed. They have a previous owner. We see the ones that have been sold over the last 1 month. Then another speech by FOMC member Logan, before we look at the Bank of Canada Financial System Review, natural gas storage in the US, and Bank of Canada Governor Macklem issue a speech at 6 p.m. So towards the end of the week, I think the most important data will be a speech by Fed Chair Powell at 6 p.m. and a speech by ECB President Christine Lagarde at 10 p.m. So those are the key highlights for the week. So as for the earnings season, we know that more companies are still reporting their earnings. So the most important earnings for today will be Cisco, which is expected to be reporting its earnings today at the market close. So it may not be affected much at the market open, but then towards the market close, then we'll be having the outcome of the Cisco earnings for Q3. So also, we'll be having a couple of more notable earnings. One of the key highlights is Target Corporation. So remember, early in the week, I mentioned that we'll be focusing on retail earnings for this week. So we know a couple of companies have been reporting their earnings, including Walmart, Target Corporation, among other big retailers in the US. Yesterday, we saw Home Depot missing revenue by the biggest margin in 20 years. So I don't know if there will be a big miss in Target, but it's something that we need to be watching closely. So we'll also be looking at Take-Two Interactive Software, Trip.com, as well as Wix.com. So these are the key highlights of the companies reporting their earnings later today. So besides these, now I think it's time we look at a couple of charts and see what we might be expecting for the day. So the first and the most important highlight of the day is that gold managed to break the 2,000 price level and traded for below 2,000 for the first time since the start of the first week of May. So this is when we had gold breaking above 2,000, and it has kept to the above 2,000 for quite a period of time. I would say 3 weeks. And after breaking outside this triangle, we might be expecting some further downside momentum since a breakout of this magnitude may be imply that we could be seeing even lower prices. So a key target level, as you can see, is an area where we have had several support areas being tested severally. And this is the area highlighted here in yellow at a price level of around 1974.4. So further bearish momentum in gold is expected. As you can see, there was some form of pullback happening yesterday after the sharp drop. So after this happened, now we can see heading into the London session, we're already seeing some signs of momentum further back downwards. So the other key highlight is the dollar index, which made a very important rally yesterday. So after the pullback on Monday, yesterday managed to cruise higher. And today you can already see the dollar being really strong and pushing even higher. So from the forward chart, after breaking this pattern that we had highlighted a week ago, you can see the break happening, pullback and a continuation, implying that the dollar is really strong in the markets. So the impact of a strong dollar is one, you get to see these currencies that are retracing back downwards. So clearly for pound USD, it continues to drop, has already hit our target as per yesterday, breaking this level here, the low of the week, and perhaps we'll be seeing some even further downside for pound USD. So for New Zealand USD, made an impressive rally here, but now what we are seeing is a very strong dollar. So higher prices are being rejected, especially from what we are seeing from the previous 1 hour candlestick. So potentially we could be seeing the dollar strengthen against the New Zealand dollar, and we see prices dropping to the previous low. So as for Euro USD, it's the same case, market dropping all the way down, pulling back down, and then breaking the support at 1.08, which was our target. And now, if I zoom out my charts from the forward chart, then you can see that we are testing a major level at 1.08311. So if the price happens to break that level, then we look at the base of the pattern here. And this is the area that makes sense to target, 7874. So from the 1 hour chart, this is how it looks like. So if you happen to break that level, then there's one more level downwards, which is around 1.07874. So if the dollar happens to weaken later in the day, then we could be seeing the euro rally back to the previous high of 1.09108. So if I remove this, then we'll have some more clarity on the key levels to observe for the euro, 1.091 and also 1.07874. So as for USD CAD, you can see quite a big rally happening towards the end of the day yesterday, and then today continuing to move even higher. So we go to our first target of 1.35286, and now the market is putting back to 1.35086. So from here, now you observe the price action. If it indicates even higher prices, then the target moves to the previous high, and this is the high that we saw last week. So this could be an area around 1.35640. So for USD JPY, some very strong rally currently happening, and this is observable on the 1 hour chart. So potentially, if this continues to rally, then our target remains on this swing high of 137.75. So this is potentially a very nice target. And if there's a retest, then we will be observing 136.5 price level as the key level support. So for the Australian dollar against the US dollar, very sharp drop here on Monday. We saw a good rally, but then this has already been erased. So the gains that we made on Monday have already been erased. So for short-term target, we can see a key price level that is around 0.66251 as a nice target here. But then if the market breaks down further, then we also have a key level target on the previous support level. And this is all the way down to 0.65793. So already, this is a level that is so difficult to break. So if you look at this area here and this area here, there are multiple times when the market was unable to break that level. So if it happens to be a very strong support and the dollar weakens for the day, then we could be seeing the market pulling back towards yesterday's high. However, for now, it seems like the dollar is really strong. So an extension of this trend could be all the way down to 0.65793. So as for US equity indices, they managed to form a breakout yesterday. So despite trading in a triangle for a while, and the triangle basically starts from this swing here, the big swing, and then up and then down, up, down, up, down. So you can see the highs were getting significantly lower and the lows were getting significantly higher before the market broke out yesterday. So after retesting and pulling back downwards, it seems like the market is very resilient and is attempting to pump back higher. So now the upper trend line remains a key focus for the day, where we could potentially be seeing the market retesting the upper trend line. So this rally here could go back to retest this upper trend line here. And of course, the base of the triangle is around here. So if we happen to see an all-out crash, then the target is 4,099, which is basically around 4,100. So for now, we could be seeing the market rallying. This is the S&P 500 towards a level around 4129. So US Tech 100 was the most bullish index yesterday, made quite an impressive rally. So from the 1 hour chart, you can see how it opened, went down, and then broke the resistance that it was unable to break for a few days. So went all the way up, pulled back down, happened to bounce here, but doesn't seem quite very strong in breaking into newer highs. So perhaps a pullback here is in play, but also we cannot argue out the potential of the market retesting yesterday's high. So if the market happens to be bullish today, 13,498 is a nice target, but then we could also see a complete pullback downward towards the lower trend line. So our lower trend line on the 1 hour chart looks like this. So it also coincides with yesterday's low. So a price level of 13,376 might be a nice target, but based on the current price action, it seems like the indices are really strong. So yesterday's high seems like a nice target for the NASDAQ 100. So as for the Dow I think was really weak yesterday. So what we are seeing here is a break outside this triangle. So you can see the triangle and how it was playing out, a breakout here, and the market kept going down. So today it seems quite resilient. Then if it keeps going up, then this lower trend line might be a nice target, which could be acting as the resistance. So we could be seeing the market retesting this area here. So if I was to check the price action here, basically we're looking at 33,173. So UKOIL has been significantly bearish. So it was trading sideways for a couple of days. This is almost a week. Then it broke towards the lower side and we started targeting the lower support at 71.5. So market dropped halfway, didn't quite get to our target and pulled back to retest the area. And every time the market has gotten to that level, it seems like the market is refusing to break above that area. So the key observation is now these are major resistance level here. So whenever the price of oil gets here, finds resistance and goes back downwards. So for now, it seems like a nice swing downwards. And clearly, this support level is now significant enough to use as a target, 73.23. So key price levels remain at this resistance, 25.4. And of course, we have our 73.2 here. So just trying to make sure we don't have too many items noting my charts. So I believe I've done analysis for a majority of the pairs. So for the for the UK 100 or the FTSE 100, which is the benchmark index for the London Stock Exchange, we have seen some sideways momentum happening for quite a period now. And it's safe to assume that this market is neither going up or down. So all we are seeing for the last couple of days is sideways momentum. So market swinging down and then up and then down and then up and then down. And now it seems to be bouncing along this area here. But then if you go to the 4 hour chart, then it's not really a good play. So it basically implies a market that is trading sideways. So this is the third week, but the market is neither going up or down. So now if you are an intraday trader, it might make sense to trade in the opposite direction. In this case, going upwards, but the most important price levels are not here. So we are in between the moves. So the most extreme prices to look for the best opportunities seem to be around 7,811, and on the lower side, 700, 689. So that being mentioned, I'll be checking to see if you guys have any questions. Do we have a prop fund in Kenya? No, we don't have any prop fund that is licensed in Kenya. So there's a lot of them, but none of them is licensed in Kenya. Please shed some light on debt ceiling crisis and how it might affect the markets. So yes, there's a debt ceiling crisis currently happening in the US. The US Treasury Secretary, Janet Yellen, mentioned that on 1st of June, if the US will not have adjusted the debt ceiling limit, then the US may not be able to honor its bills. So this often leads to what we call a government shutdown, where basically the government cuts its expenses, especially for non-essential stuff. So we could be seeing some people being sent on unpaid leave, museums being closed, and so on. And this is a real crisis brewing, and nobody really wants that to happen. However, whenever there is a debt ceiling negotiations, if the Congress doesn't have a majority with the ruling party, then it's usually a tug of war, where they basically say, if you Democrats want us to expand the debt limit, then we also have a couple of our bills that we also need passed. So before you pass this, we also need for us to include these so that we can have them passed together. So it's a very tough political war or political environment happening in the US. In fact, the US President Biden was supposed to travel to Japan today, but he declined. He basically canceled the meeting in order to deal with the debt ceiling crisis happening in the US right now. So in order to avoid the US government defaulting on its debts, then they have to keep negotiating until they have an agreeable contract or an agreeable bill that they would pass through Congress that favors both the Democrats and the Republicans. So remember, for them to expand the debt ceiling, they need bipartisan support from both sides. So what's causing the dollar strength? There has been a couple of speeches this week from Fed members, and all they're saying is that depending on the data that we see on the economy, if we happen to see the economy being very resilient, then we have to walk the path until inflation gets back to 2%. So in the last inflation reading, inflation was 4.9%, with a 0.4 rise in April, and this is not a pretty picture. So for the Fed, it has to go all the way until inflation drops to 2%, which implies that there is a higher likelihood that the Fed will go for another rate hike, and a rate hike basically implies a stronger dollar. So this explains why we are seeing a very strong dollar happening in the markets. So we are getting a series of good economic data, and good economic data means a hot job market, more jobs created in the last 1 month. We also saw more growth in the retail sales data yesterday. So all these are combining into a picture where the Fed may have to tighten the economy even more in order to get inflation back to the 2% target. So that may explain the dollar strength. So in a previous session, you mentioned that US hedge funds are dumping stocks. Why should anyone buy stocks other than sell? So yes, there's a lot of hedge funds in the US that are heavily short on the stock market. So they have basically put overweight position that the stock market is going down. So by making these bets, it doesn't mean that they control the market. So for now, especially from the events we saw yesterday, the Nasdaq was really strong, but the SP 500 and the Dow Jones were quite weak. So even if the Nasdaq was adding, the SP 500 and also the Dow Jones were going down. So also observing the top 3 indices, the majority of the growth is as a result of the top 5 companies. So a majority of the companies in the index tend to be either neutral or losing money on the year. So it's only that the top companies are making hypernormal profits. For instance, NVIDIA is up over 100%. We have seen Apple making a very strong rally. Tesla is really high. Microsoft as well as Facebook. So with the top big companies are having a very good rally, and they have much bigger weights than other companies, then they lead the indices into a rally, but smaller companies are much weaker as we speak right now. So US30 has been bearish, Nasdaq bullish, while SP 500 raging on 4 hour. Where this divergence is tech. Tech has been the most resilient sector this year in the US. So you know that the Nasdaq is tech heavy, it's tech dominant. A majority of the top tech companies are in the Nasdaq. So if tech is doing well, then we see this divergence where industrials and other companies, especially healthcare, are not doing particularly well. Energy is not doing particularly well. So with the tech heavy Nasdaq leading the index, then we see the Nasdaq rallying while these others are weak. Did we have a class yesterday evening? Yes, not the evening, but in the afternoon at 4 p.m. So remember, the evening class is on Thursday, while the afternoon class is on Tuesday. So on Tuesday, we do at 4 p.m., while on Thursday, we do at 8 p.m. So why do you think oil is dropping, though they cut production? It's the slowdown in economic growth worldwide. So economic growth is slowing down over the year, and this results in a lower demand for oil, which is what we're observing in the markets. So that being mentioned, thank you very much, guys. So we have a new podcast episode going live in the next 3 minutes. It will be available on all podcast platforms, Google Podcasts, Apple Podcasts, Spotify, TuneIn, as well as on YouTube. So kindly feel free to check it out, comment, and make your responses, and we'll really appreciate this. So thank you very much, guys, and I hope to see you on the next one.